In this video, we're going to talk about how to account for the disposal of a fixed asset. So fixed assets also are known as long-lived assets, and they're basically assets that provide value for longer than 1 year for the firm. So it could be property, plant, and equipment, or it could be some type of intangible asset. But usually it's PP&E that we're thinking about when we're talking about a disposal. So to calculate the gain or loss on the disposal, what we're going to do is we're going to take the proceeds from the sale. So if we sell a piece of equipment, how much cash or what do we receive? What's the proceeds? And then we subtract the net book value of the asset, which is the original cost minus the accumulated depreciation, and that gives us the gain or loss. Now I know that's a lot to process, so I want to walk through an example. I think it'll make it a little bit easier for you to understand, and I'll show you the journal entries and so forth. So let's say January 1st, 2018, you decide your firm buys a machine that makes customized bobblehead dolls, and so this machine cost you $150,000. So I'm just going to, this should be review for you, just the basics. We record the purchase, we'll debit equipment for $150,000, and then we'll credit cash for $150,000. And then we're going to have to depreciate this machine because it's property, plant, and equipment. We'll just say that we use straight line over a period of 5 years, no salvage value. And so we debit depreciation expense and credit accumulated depreciation for $30,000 for year 1, and then we do that for year 2. Now, we are going to dispose of or sell this equipment, this machine making bobblehead dolls. We're going to sell it at the end of year 2. So this is December 31st, 2019. This is the end of year 2, right after we've made this journal entry. We decide to say, oh, you know what? We're going to sell this machine. We have someone who's going to buy it for $72,000 cash. So now we have to figure out, how do we account for this? We're receiving some cash and we're getting rid of this machine. So what we're going to do, and as I'll just put the date here, December 31st, 2019, you could tell that we're going to be debiting cash, as we just received cash of $72,000. So you should be able to get that part right. And then we're getting rid of the equipment that had a book value, or before we get into the net book value, the original cost, I should say, of $150,000. So I'll say the original cost of that equipment was $150,000. And since we're getting rid of the equipment, we debited it when we brought it on the books. And so now we're going to credit it to get it off the books, because that equipment should no longer be an asset on our balance sheet, right? And we debited it when we bought it. So now we're going to credit it for that same amount, which is, this is the original cost. That's the historical cost of the asset. Now, this asset had some accumulated depreciation associated with it, right? And that's a contra asset. But now we've got to debit that. We had credited it twice for $30,000. So now, that's total $60,000 of accumulated depreciation associated with this equipment. Like if we went to the balance sheet, we'd see equipment, $150,000 minus $60,000 of accumulated depreciation. So we've got to get rid of that accumulated depreciation. So we're going to debit it. We're going to debit the accumulated depreciation for $60,000. Now remember, it's $60,000, not $30,000, because it's 2 years worth of accumulated depreciation. Now we have an issue where our left and right side do not balance, because we have $150,000 on the right side, $132,000 on the left side. So what would it take to make this entry balance? Well, we're going to need a debit in this case. I'll change colors so you can see clearly. $18,000. How did I get that? $150,000 minus $72,000 minus $60,000 is $18,000. And because it's on the debit side, it's going to be a loss. Call it loss on disposal of fixed asset, or loss on disposal of equipment. Now, if it had been where we needed a plug on the right side to make the thing balance, then we'd have a gain on the disposal, right? But because it's on the left side here, the left side will be a loss. So we're going to have a loss on the disposal of this equipment. Now, this is the journal entry. Let me show you the approach where if we go back to our original equation, this might be easier for you to understand or think through. So if we go back to our original equation, we say, okay, it was the proceeds from the sale, which we got $72,000 from the sale. That's the cash we received for this machine, right? Minus the net book value of the asset. Well, what's the net book value? So the net book value is that value we'd see if we were on the balance sheet, where we'd see 150,000 original cost minus 60,000 accumulated depreciation. So the book value, the net book value of the machine was $90,000. Okay, and then again, this is what we would see. This would be on the balance sheet. It would say net value machine or net value equipment, $90,000, right? That's the original cost minus the accumulated depreciation. So that is going to give us, if we take the 72,000 minus the 90,000, those are the two that we care about here. So that minus that equals a negative number, negative 18,000. So that's a loss. That's a loss. So then we can take that so let's see. Okay, does that make sense? A $18,000 loss in lieu of or in light of what journal entry we made? Well, $18,000 loss. So there's a couple of ways you can think about it. If you wanted, you could calculate the loss through the equation just by taking what you get from this selling the asset minus the book value, the net book value of the asset, and then get the gain or loss. Or you could just make the journal entry, and then once you have the journal entry, just figure out what's the plug. And then bear in mind, this loss is going to go to the income statement. It's going to go to the income statement where it's going to reduce net income. It's similar effect to an expense.